I want to point out the average daily range at near all times, at or near all-time lows. We look at today's session. This is the day session only of the daily bars. Today's range, we are looking at 7.75 points, and there is about an hour and a half left to go. An hour and 50 minutes actually. It's 2:25 Eastern, and the market closes at 4:15 for the day session at ESD, so 7.75 point range. And to give you an idea, I put two indicators on this chart to highlight this. You see 0.00174, that is 0.174% of the close, the high minus the low over the close. So you're taking this percentage range as a function of the close. So if the S&P is at 2,000, a 1% move is 20 points. If the S&P is at 4,000, a 1% move is 40 points. And we're looking at a 7.75 point range today. So we're at 0.174% range as a percentage of the close on today's session. The bottom indicator is the average daily range as a percentage of close over the last 14 days. The top indicator is just the current day. This is over the last 14 days, and you see here we're at 0.5%, half a percent, averaging 14 days, but the last 5 days the ranges have shrunk even further. So we're near the end of 2019 levels, which are in here. And so what is the all-time average daily range as a percentage of close on the S&P futures day session? Let's take a look at that. That occurred on October the 18th. October the 18th, 2017, low volatility year, we hit 0.33%, was the lowest average daily range as a percentage of close over the last 14 days. And so 0.33%, put that in perspective, we are at 0.53% over a 14-day period. So on October the 18th, let's look at October the 18th. On October the 18th, we had, what was the average range over close for the current day? The average range over the close for the current day was 0.187. Currently, we are at 0.174. So we are in that extremely narrow range period. And so what you see in recent years with Fed stimulus and financial engineering by the Federal Reserve is that when there's panic, the market sells off. There's lots of volatility, big ranges, and then when it gets put back into place to where they want it, the ranges are paltry. It's almost like a fixed income investment. Let's put it up at all-time highs. Let's keep it real still, and this is where we want the result of this because it creates wealth, and this is what we want. But that's not really indicative of a real market environment when it's controlled to that level. So it's pretty extreme where it is now. It is a free market because we can still trade it, and there's still opportunity. But when it shrinks this low, it's hard to trade and make profits like you can when it's in a normal range, normal market environment. So if you look at a normal range, I would say is around 1%. So if you look, 1% is around the median range. Even 0.5% is normal on any given day, but today is 0.17%. So a 1% range would be 40 points. A 0.5% range would be 20 points, and we are less than 8 points today. I remember when the S&P was back in here in this time frame at these levels, 6 and 8 point ranges were holiday trading ranges, and now we're in holiday trading ranges. It is summer, but it's not a holiday. So very narrow ranges. Wanted to point this out to you. When you just look at this chart right here, the one-day analysis of the average range over close. Now that we still have time left in this session, and so this could break out to the upside or downside and expand that range, but you just see how this really drops off here below that blue line. That's at 0.5%, and it really just drops off. So we could expand that before the close, but it's very narrow right now, and wanted to highlight that. It's Friday summer trading session, feels like a holiday. And if you buy the market for an extended move and it doesn't move, there's not a lot of opportunity to be had. On the other hand, the metals are all over the place this week, so it's unusual times, unusual markets, and I wanted to share that with you as we go into the weekend on August 13, 2021.